What's up, gang? Billy here, Storm Trades. You know what time it is? Trade recap. This time I'm going to go through my gold futures long trade from Friday, the 13th. I should have known just by the date that it was going to be bad news. We took a loss or a business expense on this trade. And after I go through the loss, I'm going to go over what I think I could have picked up on in my analysis that might have kept me out of the trade. Okay, I might not have, because at the end of the day, we're just not going to win all of our trades, right? Price is going to do whatever it wants, whenever it wants. When we're doing our analysis before the session, we're just trying to give ourselves a we're trying to give ourselves a slight advantage, and at the end of the day, price doesn't care how much time we put into our analysis. So anyway, first things first, starting off on the daily, I'm looking for something that's obvious, right? What is obvious to me? Just by looking at these last four candles, pretty obvious to me that price action has been bullish on the daily. But I go through the same process every single time, right? Every single day, mark out the previous daily high, mark out the previous daily low, high and low there. I'll draw a fib just to sort of see where we are, right? So just by drawing the fib and seeing where we opened and where we are currently, I mean, we're leaving a fair value gap here, right? We didn't even come close to touching the midpoint of the previous daily candle. I mean, all of these things tell us a story, telling us, and also this day was the day that war broke out in the Middle East. Gold is always seen as an asset that is a flight to safety during times of upheaval. So it made sense that gold would be shooting higher. But can't let the external news determine my bias. I already had a video on that with what happened to me on this exact same day with oil. Anyway, I also always want to take a look at where's the most recent internal and external liquidity. And this is important because we want to short from swing highs and from bearish daily fair value gaps, and we want to long from swing lows and bullish daily fair value gaps, right? So we are currently at a swing high here. This is why, even though looking at the candles, I was pretty sure we were going higher, understanding the outside factors like the news of the war, I was pretty sure that was going to send gold higher. However, I short at swing highs. Swing highs on the daily. So I actually was slightly conflicted here, and so I had marked up on my analysis that I was neutral on the daily bias. When I'm neutral, that does not mean I cannot trade. I am then going to look at the hourly market structure, and in this case, I could already tell by looking at the daily, the market structure is going to be extremely bullish, and it has been from the beginning of the week until currently. That said, I'm still going to go and start mapping out the narrative, and then also look at where price is likely to head next. All right, so I'm going to pull up the hourly chart here, and just something to make note of. Right, it's clear to which side of the curve we're on, right? And the first change in the state of delivery happened on Monday, and ever since that, we have been supported. Down close candles have been supported with displacement higher, and we've just been stair stepping up this market maker buy model. It is a classic market maker buy model. We had the smart money reversal on Monday, and we've just been higher ever since, right? You can see how these daily candles are reflected in the bullish market structure on the hourly. I always run a fib from wherever the smart money reversal is, if it's clear that that's what it is, or if it's a clear change in the state of delivery. And throughout the week, we were just plugging away, reaching 1.1 to 1.5, -2 to -2.5. And, look, something that which should jump out at me is when I'm looking at price this morning, we've already attacked the -4 to -4.5, right? So that's something that's in the back of my mind, but I was bullish until something was going to tell me I shouldn't be bullish anymore, right? So I always try and mark out and put into my daily plan where my invalidation levels would be. So we've just simply been supported by all the bullish hourly fair value gaps, and most down close candles um, uh, have been traded through and with displacement, right? So I would have needed to see some sort of a close through a bullish hourly fair value gap in order for me to be interested in shorts on this day. So, some things you just can't, sometimes you're just going to be wrong. All right. Anyway, I just wanted to mark out some more. This is an order block here on the hourly. Where's price most recently been delivering from? Well, we traded into the upper quadrant here of this hourly bullish fair value gap. And I'll just make note here that we had just closed here while I was looking at price. This is the 9 a.m. candle. We had opened up another hourly fair value gap. I was looking for us to trade down into that, okay, at the beginning of the next hourly candle, and some sort of manipulation there, and then a move higher. And that was my plan. All right, so you got to have a plan. And my invalidation would have been a close through this lower bullish hourly fair value gap. All right, now I'm going to move down to the M5, right? This is my execution time frame. Here's the hourly bullish fair value gap. I'm going to be looking for price to manipulate down into. All right, and I'm just going to be following price. I'm looking for some sort of a sweep on the M5 into this hourly fair value gap, right? This is a plus setup if I can get it. If I can get some sort of a move, which we just did here, we came down in to the bullish hourly fair value gap. At this point, I'm going to mark off this sweep right here. And whenever I mark off a sweep, I'm marking off the change in state of delivery, which is in this case, series of down close candles that swept the liquidity into the higher time frame, POI. Now, I'm watching price, and I'm looking for some sort of a close above the change in state of delivery here. I want to make note that we just also closed through an M5 fair value gap, creating an inversion fair value gap. And at the close, which I like to see, right? And I like to see that with displacement. At this point, I entered a trade. I mean, this is an A+ setup for me. A sweep into the higher time frame POI, displacement through an old fair value gap, and a close above the change in state of delivery. And I looked to trade to this hourly swing high above, right? So it was going to be about a 1.74 R trade. I'm fine with that. Actually, I put the stop just underneath this swing low that we ran. So it's going to be about a 1.8, 1.89 R trade. And I'll show you that I entered right. I'll show how I entered. I entered right here. Stop. Low that swing low that before we took liquidity. Take profit up here at the hourly swing high. And let's move price forward. I felt confident about this trade, right? And get up a little bit, and boom, destroyed. Okay, that's going to happen. It's all good. When I take an A+ setup, which I consider this to be, I'm okay with taking a loss. It's a business expense. We've been winning a ton, and this is totally fine. Now, something I want to make note of: could I have picked up on this? Right. So, a couple things. For starters, we saw that we pretty much had already completed the money market, or the market maker buy model, right? And once we hit that daily swing high, that should have been at the -4 to -4.5 standard deviation. That really should have been a tell that we probably have exhausted our upward movement at that point. Now we may keep going higher throughout but to continue to look higher, maybe we could have avoided this if we had really looked into that a little bit more. And something else that I wanted to make note of: I've been using the ADR levels recently, and I'm looking at them for framing reversals and draws on liquidity. And I'm going to pair that here with, see right here, this was the Asia high, and then I'll show you here where one third ADR level was. And look how price respected that one-third ADR level while sweeping the Asia high. I was trying to get into a trade after that, right? So looking back on it, there's some information here that we could have used to our advantage. It's all good. We took an L, no big deal. We move on. We've been winning like crazy. We're learning. And if you got anything out of this video, like, subscribe, and I just appreciate anybody that's along for the ride with me on these trade recaps. All right, thank you very much. See you guys.